The Dow Jones Index is an underrated source of quality growth stocks. These high-growth Dow stocks have positive momentum heading into the summer. Microsoft. Microsoft's moves into cloud and AI have powered this growth stock to new highs. Salesforce. Activist investors have helped get Salesforce shares back on track. McDonald's. McDonald's real estate holdings and affordable food items hold great appeal in current market conditions. Let's dive in. Here are the 3 high-growth Dow stocks with unstoppable momentum. Welcome to Timely Investment Research. The Dow Jones Industrial Average has a reputation for being a stodgy index. It is made up of 30 large blue-chip American companies that offer a wide representation of the American economy. However, many investors have given up on Dow stocks, instead using the Nasdaq or S&P 500 as a more comprehensive index for the overall market. That said, there is more diversification in the Dow than people may give it credit for. In fact, there are actually a handful of companies with strong growth and momentum within the Dow index. Here are 3 Dow stock constituents that are performing admirably as of late. Number 1. Microsoft. Microsoft is certainly one of the better Dow growth stocks out there. The company has enjoyed tremendous revenue growth in recent years thanks to its booming Azure cloud business. Additionally, the firm's rapid moves into artificial intelligence via partnerships with companies such as OpenAI should help Microsoft's revenue growth continue for years to come. There's a downturn in the tech industry now. However, analysts still see Microsoft growing revenues and earnings this year before returning to double-digit top-line revenue growth in 2024. Microsoft is the perfect sort of Dow growth stock. It is a long-established blue-chip company that absolutely dominates its core operating system and office software market. It offers investors a solid and steadily growing dividend as well. Yet, there's that appealing growth upside too with cloud, AI, quantum computing, and more futuristic technologies. Number 2. Salesforce. The Dow Jones Index is rebalanced every few years in an effort to keep the index modern and up-to-date. Salesforce entered the index in 2020 by kicking out ExxonMobil. This ended up being poor timing, as ExxonMobil stock has tripled since then, while Salesforce shares fell into a slump. But it appears that Salesforce is back on track now. Activist investors took aim at Salesforce last year, saying that the company was spending too much money and didn't have enough focus on core operations. Since then, Salesforce has made changes such as laying off employees to improve profitability. Salesforce stock has now rallied nearly 50% year-to-date. Despite the layoffs and downturn in the broader industry, Salesforce continues to grow revenues and earnings at a double-digit rate. Ultimately, the need for sales and communication software isn't going anywhere despite the current slowdown in the tech industry. Salesforce stock has strong momentum now, but is still selling far below its peak 2021 price. This leaves further upside for this leading high-growth stock. Number 3. McDonald's. McDonald's is probably not the first name that comes to mind when you think of Dow growth stocks. However, the Golden Arches have sizzling momentum right now. Shares have been up nearly every day over the past month and just notched new all-time highs. Despite the bear market, McDonald's stock is up double digits over the past year. What explains McDonald's gravity-defying recent run? The company benefits from 2 key macroeconomic factors right now. The first of these is that McDonald's owns a lot of its real estate. In fact, some folks joke that McDonald's is a real estate company with a side business in flipping hamburgers. Given the surge in inflation, land prices and rent are soaring. This makes the value of McDonald's real estate higher, while saddling the competition with heavier costs since they rent store locations from landlords. A win-win for McDonald's. The second factor is the inflationary pressure on people's budgets. In a time like this, folks have to make some sacrifices to balance their budgets. While McDonald's may not be most people's idea of a leading culinary experience, its food can fill people up at a reasonable price. That's more valuable than ever in today's economy. All this adds up to a McDonald's stock which has become a surprisingly strong momentum leader in recent weeks. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.